Are you satisfied with your current cryptocurrency trading strategy and the profits it's bringing in? Welcome to our deep dive into the art of day trading cryptocurrencies. This isn't just about buying low and selling high, it's about understanding the market's pulse, spotting patterns, and making strategic moves. It's about turning the unpredictable into the predictable and the volatile into the profitable. So if you're ready to elevate your trading game and you're seeking an effective way to multiply your crypto profits, stay tuned. Before diving into the nitty-gritty, it's crucial to understand what day trading entails. At its core, day trading is a method of trading financial instruments such as cryptocurrencies, stocks, or commodities within the same trading day. Picture this. You're a surfer, riding the waves of the market. You buy a cryptocurrency in the morning and by the afternoon, you've sold it, hopefully for a profit. That's day trading in a nutshell. What sets day trading apart from other types of trading is its pace. It's fast, it's dynamic, and it requires a keen eye for detail. It's not about holding on to assets for the long haul, but rather capitalizing on short-term market fluctuations. As a day trader, you're not just a passive observer. You're an active participant in the market, making numerous trades in a single day, each one potentially leading to profit. So, are you ready to dive into the world of crypto day trading? Let's proceed. To excel at day trading, you need to grasp a few fundamentals. Firstly, let's talk about the basic requirements for day trading. You'll need a stable internet connection. It sounds simple, but this is crucial. The crypto market runs 24 hours a day, 7 days a week, and it waits for no one. A momentary disconnection could mean missing out on a golden opportunity or failing to prevent a substantial loss. Next, you'll need a good trading platform. This is your command center, where you'll execute trades, analyze market trends, and make important decisions. There are numerous platforms available, each with its unique features and tools. Some are designed for beginners, while others cater to experienced traders. Choose one that suits your skill level and trading style. Now, let's talk about starting capital. Day trading isn't a get-rich-quick scheme. It requires a sufficient starting capital. Remember, the higher the investment, the higher the potential return, but also the higher the risk. It's a balancing act that requires careful thought and consideration. Understanding the market is another fundamental aspect of day trading. It's not enough to follow the herd. You need to understand why the market is moving in a certain direction. Is it due to a major news event, a new product launch, or perhaps a change in government policy? The more you understand, the better your predictions will be. Finally, risk management. This is perhaps the most important aspect of day trading. The market is unpredictable, and losses are inevitable. But with good risk management, you can minimize your losses and maximize your gains. This involves setting stop-loss orders, diversifying your portfolio, and never risking more than you can afford to lose. With these essentials in place, you're ready to start your day trading journey. But remember, day trading is a skill that takes time and practice to master. Don't be discouraged by initial setbacks. Learn from them, refine your strategies, and keep going. A good strategy is the backbone of successful day trading. This statement holds true whether you're trading traditional stocks or cryptocurrencies. Successful day traders employ a variety of strategies, each suited to different market conditions and individual trading styles. Let's dive into a few of these strategies and see how they can be applied to the volatile world of cryptocurrency day trading. First up, we have scalping. Scalping is a strategy that involves making numerous trades throughout the day, aiming to profit from small price changes. In the world of crypto, where prices can swing wildly in a matter of minutes, scalping can be a highly effective strategy. However, it requires a high level of attention and quick decision-making skills. So, if you're someone who thrives in a fast-paced environment, scalping might be the strategy for you. Next on the list is range trading. This strategy involves identifying and trading within specific price ranges. Traders using this strategy buy at the lower end of the range and sell at the higher end. In the crypto market, this strategy can be particularly helpful during periods of lower volatility when prices move within a predictable range. But remember, patience and discipline are key to successful range trading. Our third strategy is high-frequency trading, or HFT. High-frequency trading utilizes powerful computers to transact a large number of orders at extremely high speeds. These high-frequency traders make money from arbitrage opportunities and transaction fees. In the cryptosphere, HFT can be lucrative due to the high volatility and 24/7 trading hours. However, it's important to note that this strategy requires significant technical knowledge and resources. There are, of course, many other trading strategies out there. Some traders might prefer swing trading, where positions are held over several days to capitalize on price swings, while others might opt for momentum trading, betting on the continuation of existing trends. The key is to find a strategy that suits your trading style, risk tolerance, and the specific characteristics of the crypto market. As you explore these strategies, it's crucial to remember that no strategy is foolproof. All trading involves risk, and it's possible to incur significant losses. Therefore, it's essential to always use proper risk management techniques and never invest more than you can afford to lose. In conclusion, whether you're scalping, range trading, or dabbling in high-frequency trading, having a well-defined strategy can significantly improve your chances of success in the tumultuous world of crypto day trading. But remember, as with any investment, there's no guarantee of success, and it's essential to do your own research and understand the risks involved. Remember, the best strategy is one that aligns with your risk tolerance and trading goals. So take the time to understand these strategies, assess your own risk tolerance, and set clear trading goals. That way, you'll be well on your way to mastering the art of day trading in the crypto market. Technical analysis is a key tool for any day trader. Think of technical analysis as the compass guiding your trading decisions. It's your North Star in the vast universe of cryptocurrency trading. It's the lens that brings clarity to the often foggy and unpredictable market trends. Technical analysis is all about studying past market data, primarily price and volume, to forecast future price movements. It's a bit like weather forecasting. Meteorologists study past weather patterns to predict future conditions. Similarly, traders use technical analysis to anticipate future price movements based on historical data. The beauty of technical analysis is that it operates on the principle that history tends to repeat itself. The idea is that certain patterns of price movement repeat over time, and recognizing these patterns can help predict future price movements. This is particularly useful in the volatile world of crypto trading, where prices can swing wildly in short spans of time. Now, you might be wondering, how exactly does technical analysis work? Well, it's all about charts, indicators, and patterns. Charts provide a visual representation of price movements over a certain period. These can range from simple line charts to more complex candlestick charts. Indicators, on the other hand, are mathematical calculations based on a security's price and volume. Some popular indicators include moving averages, relative strength index, and Bollinger Bands. These indicators can help identify trends and signals for buying or selling. Patterns are another crucial aspect of technical analysis. These are specific formations that appear on a security's chart and signal potential future price movements. Examples include the head and shoulders, double tops, and triangles. It's important to remember, however, that technical analysis is not a crystal ball. It can't predict the future with absolute certainty, but what it can do is give you a better understanding of market trends and potential price movements, helping you make more informed trading decisions. In the world of crypto day trading, a well-executed technical analysis can be the difference between a profitable trade and a losing one. So, it's worth investing time and effort to understand and master this key tool. Mastering technical analysis can significantly increase your chances of success in day trading. Emotions can be a day trader's worst enemy. This is a hard truth that many traders learn the hard way. The volatile world of crypto trading can stir up a whirlwind of emotions, from the thrilling highs of a successful trade to the crushing lows of a significant loss. One of the most crucial skills in day trading, and perhaps the most challenging to master, is emotional control. It's not just about keeping your cool when things go wrong. It's also about not getting carried away when things go right. The key is to maintain a balanced mindset, regardless of the market's ups and downs. Think about it. Fear can cause you to sell too early, missing out on potential profits. Greed can lead you to hold on to a losing trade for too long, resulting in unnecessary losses. Both are common emotional pitfalls in day trading. But how do you avoid these traps? Firstly, it's important to accept that losses are part of the game. No trader, no matter how skilled, can avoid losses completely. Accepting this fact can help reduce the fear of losing and the desperation to recover losses quickly, which often leads to reckless trading. Secondly, setting clear trading goals and sticking to them can help keep greed in check. If you have a predetermined exit point for your trade, you're less likely to hold on to it for too long in the hope of squeezing out a little more profit. Lastly, practice patience. Trading is not a get-rich-quick scheme. It's a long-term game that requires consistent effort and disciplined decision-making. Don't rush into trades or make impulsive decisions. Take the time to analyze the market and make informed decisions. In the end, emotional control and discipline are not about suppressing your feelings. They're about acknowledging your emotions and making sure they don't dictate your trading decisions. Remember, successful day trading is less about making the perfect trade and more about consistent, disciplined effort. Risk management is not an option in day trading, it's a necessity. In the volatile world of day trading cryptocurrencies, the role of risk management is paramount. It's like the seatbelt to your high-speed ride, providing a safety net that keeps you from crashing. It's not about eliminating risk altogether, that's impossible. Instead, it's about managing and mitigating that risk to ensure you live to trade another day. Consider risk management as a strategic tool. It's akin to a chess player thinking several moves ahead, anticipating potential pitfalls and planning accordingly. Now let's delve into some strategies to help you navigate these treacherous waters. First off, one of the most effective ways to manage risk is by setting stop losses. A stop loss is an order you place with your broker to buy or sell a security when it reaches a certain price. It's a predetermined exit point that prevents a small loss from becoming a large one. Think of it as a safety valve that automatically kicks in when things aren't going your way. It's a simple yet powerful tool that can limit your losses and preserve your capital. Secondly, only risk a small percentage of your capital on each trade. This rule of thumb is a classic in the trading community, often referred to as the 1% rule. By risking no more than 1% of your capital on any single trade, you ensure that even a series of losses won't significantly dent your trading account. It's about spreading your risk and not putting all your eggs in one basket. Remember, in day trading, the goal isn't just to win big, it's also to avoid losing big. The market is a dynamic and often unpredictable beast, and even the most seasoned traders can get caught off guard. By implementing sound risk management strategies, you're not just playing the game, you're playing it smart. And that's the essence of risk management in day trading. It's about being prepared, staying vigilant, and always having a plan B. Because in this high-stakes game, the only certainty is uncertainty. With proper risk management, you can protect your capital and stay in the game longer. So there you have it, the art of day trading in a nutshell. We've taken a comprehensive journey together, delving into the world of day trading from its most basic concepts to the advanced strategies that can help you multiply your crypto profits tenfold. In the beginning, we navigated through the fundamentals of day trading, understanding its essence as a fast-paced, dynamic, and potentially rewarding endeavor. It is not just about buying low and selling high within a single trading day. It's a strategic game of capitalizing on small price movements in highly liquid markets, which cryptocurrencies certainly are. We then explored the strategies that make a successful day trader, from scalping, which involves making numerous trades to capitalize on small price gaps, to range trading, which relies on resistance and support levels. Each strategy has its strengths, and the key is to find the one that complements your trading style and risk tolerance. Technical analysis took center stage as we discussed how it aids in predicting future price movements. We learned about various chart patterns, indicators, and oscillators that can provide valuable insights into market trends and price points. Remember, in the world of day trading, technical analysis is your compass, guiding you through the tumultuous sea of price fluctuations. The importance of emotional control and discipline was another key takeaway. Day trading is not for the faint-hearted. It requires mental toughness, resilience, and the ability to make rational decisions under pressure. It's about mastering your emotions, whether it's fear, greed, or excitement, and making judgments based on cold, hard facts and analysis. Finally, we touched upon risk management, the unsung hero of successful trading. Without a proper risk management strategy, even the most skilled trader could suffer substantial losses. We discussed setting stop-loss orders, only risking a small percentage of your capital on any single trade, and diversifying your portfolio. These are essential practices to safeguard your hard-earned money. With these tools and techniques, you're well equipped to 10x your crypto profits. Remember, practice makes perfect, but don't be disheartened if you experience losses along the way. They are part and parcel of the trading journey, teaching you valuable lessons and helping you become a seasoned trader. So keep learning, keep trading, and most importantly, keep believing in your ability to master this art. Happy trading!